You move into a manufactured home, it has a kitchen, bedrooms, a front porch, central air. It feels like a house because it is a house. But the insurance industry doesn't see it the same way a standard homeowner's policy sees a stick-built home. And if you don't understand the differences before something goes wrong, you could find out the hard way that the coverage you thought you had isn't the coverage you actually need. Manufactured homes are one of the most affordable paths to ownership in this country. But whether you just bought one or you've been living in one for years, the insurance side is a completely different world from what most people expect. The policy form is different, the carriers that write it are different, the underwriting rules are different, and a lot of the surprises don't show up until something goes wrong. If you don't know who I am, my name's Jim Eddington, and my agency helps individuals and businesses with their insurance every single day. I'm going to walk you through everything you need to know about insuring a manufactured home, what makes the policy different, why the year your home was built matters more than you think, how being in a park versus your own land changes your coverage, what tie downs have to do with your premium, and what to actually look for in the policy so you're not sitting there with a gap you didn't know existed. If you own a site-built home, you probably have what's called an HO3 policy. That's the standard homeowner's form. It covers the structure on an open peril basis, meaning everything is covered unless it's specifically excluded. If you own a manufactured home, you're most likely looking at what is called an HO7. That's the manufactured home policy form. It works a lot like the HO3. Your dwelling's covered on an open peril basis. Your personal property is still covered on an open peril basis. You still get liability, loss of use, medical payments. The coverage structure is familiar. The exact form name can vary by carrier, but the concept is the same. In almost every single case, a standard HO3 isn't going to work for a manufactured home. And not every carrier writes the HO7. That's the first thing that catches people off guard. You call your agent or you go online, and the carrier that handles your auto policy or your previous home might not even offer a manufactured home coverage. It's a specialty product. And the carriers that do write it have their own set of underwriting rules that are completely different from standard homeowners. So the starting point for anyone buying or living in a manufactured home is understanding that your policy form is different, the carriers are different, and you need an agent or an agency that knows this space. Here's something that most manufactured homeowners don't know. The year your home was built changes everything about how it gets insured. June 15th, 1976 is the dividing line. Before that date, there were no federal construction standards for factory-built homes. They were called mobile homes, and they were built however the manufacturer decided to build them. The electrical, the plumbing, the framing, the fire resistance, none of it was standardized. On June 15, 1976, the Department of Housing and Urban Development put the HUD code, or HUD code, into effect. Every factory-built home after that date has to meet federal standards for structural integrity, fire safety, energy efficiency, plumbing, and electrical systems. Every one of those homes gets a HUD certification label, a small red tag on the exterior, and a data plate inside the home listing the specs. If your home was built after 1976, it's a manufactured home. If it was built before 1976, it's technically a mobile home. And that distinction matters to insurance carriers. A home built after 1976 is harder to insure. Fewer carriers will write it. The ones that do may only offer actual cash value coverage instead of replacement cost, which means depreciation gets subtracted from your claim payout. They might require inspections, updated electrical, updated plumbing, or proof that the anchoring system meets current standards. Some carriers set age limits. If the home is older than 25 or 30 years, they may decline it entirely. A home built after 1976 with the HUD label is easier to place. More carriers will quote it, replacement cost coverage is more likely to be available, the underwriting process is more straightforward. If you're shopping for a manufactured home, ask what year it was built before you make an offer. If you already own one, check for the label. If there's no HUD certification label on the exterior, don't assume everything is fine. It may be a pre-1976 mobile home, or the label may be missing or damaged. Either way, that's something to verify because carriers and lenders are going to ask for proof. Where your manufactured home sits changes how the insurance works. If your home's in a manufactured home community, sometimes called a park, you own the home, but you lease the land underneath it. The park owner carries insurance that covers common areas: the clubhouse, the pool, the roads, the utility infrastructure. Their policy doesn't cover your home, your belongings, or your liability. You need your own manufactured home policy for all of that. And the park may actually require you to carry insurance as a condition of your lease. Some parks require proof of liability coverage before you can move in. If your home is on your own land, you have more flexibility. Your policy can account for the home, the premises, the other structures on the property, but acreage can work against you. If the lot is larger than a few acres, some carriers aren't going to write it. If you're too far from a fire station or a fire hydrant, that changes your eligibility and your rate. Homes in parks can sometimes have lower premiums than homes on private land. Part of that is lot size, part of its proximity to infrastructure, but the park itself matters too. Spacing, fire access, and the age of the homes around you can all affect how the carrier sees the risk. One more thing about the park situation. If you ever need to move your manufactured home, your HO7 doesn't cover the home while it's in transit. You might need separate transit coverage or a trip endorsement depending on the carrier and the situation. Most people never move a manufactured home, but if you're buying one that needs to be transported to your lot, have a conversation with your agent before the home is on a flatbed. Manufactured homes are built on a steel chassis. They're lighter than site-built homes, they have flat sides, and wind can get underneath them. That's why every manufactured home needs a tie-down and anchoring system, and carriers are paying more attention now to this than ever. There are two basic types. Frame anchors connect straps to the steel chassis rails underneath the home. Over-the-top tie-downs run straps over the roof and anchor into the ground on both sides. Other single-wide homes often have the over-the-top style. Newer homes typically use frame anchors because the structural design is stronger. Carriers might require verification that your anchoring system is installed, maintained, and meets certain standards before they're going to issue or renew your policy. If your straps are corroded, loose, or missing, that can be an underlying problem. If anchors have shifted in the soil, that's a problem too. This is where it connects to your wallet. A home that's properly anchored on a permanent foundation or tied down to current standards is going to be easier to insure and less expensive to insure than a home sitting on temporary piers with worn out straps. Some carriers offer discounts for homes on permanent foundations. Some aren't going to write the policy at all if the anchoring system doesn't meet their requirements. If you're buying a manufactured home, get the tie downs inspected before you close. If you already own one, check them periodically, especially after high wind events. In a state like Nevada or Arizona where you get strong gusts during monsoon season, those straps take a beating. Here's what I'd tell anyone shopping for manufactured home insurance, or anyone who's already had a policy and wants to make sure it's actually doing what they think it's doing. First, find out whether your dwelling coverage is replacement cost or actual cash value. Replacement cost pays to repair or replace without subtracting for depreciation. Actual cash value subtracts depreciation, and on a manufactured home, that gap can be significant. The older the home, the bigger the gap. Ask the same question about personal property. On most HO7 policies, personal property is covered at actual cash value on a named peril basis. You may be able to upgrade to replacement cost on contents for a small additional premium, and it's usually worth it. Second, understand your deductible structure. Some manufactured home policies carry separate wind and hail deductibles that are higher than your standard deductible. Know what both numbers are before a storm hits. Third, check your liability limits. Liability and medical payments work the same as a standard homeowner's policy, but make sure your limits are adequate. The minimum most carriers offer is $100,000. In my opinion, that's not enough for most people. You want at least $300,000 and an umbrella policy on top of that. Fourth, know what's excluded. Flood is not covered. Earthquake is not covered. Transit damage is not covered unless you add a specific endorsement. These are the same exclusions you see on a standard homeowner's policy, but manufactured homes in low-lying areas or flood zones need to take the flood gap especially seriously. And fifth, check your sublimits on high-value items, jewelry, firearms, collectibles. Most HO7 policies cap payouts on certain categories. You may need a scheduled personal property endorsement to cover the items above those caps. Manufactured homes are real homes. People raise families in them, build equity in them, and deserve to have them properly insured. The mistake is assuming the insurance works the same as a standard homeowner's policy, because it doesn't. The policy form is different, the carrier market is different, the underwriting cares about things that never come up on a site-built home. And if you don't have an agent who knows this market, you end up with gaps you don't find out about until you file a claim. If you own a manufactured home or you're thinking about buying one, get a quote. There's a link below. We write manufactured home insurance in Nevada, Arizona, Utah, and California, and we work with carriers that specialize in this exact type of coverage. Subscribe to the channel. We publish most business days, and what we cover is for individuals, families, and business owners who want to understand their insurance before they need it, not after. Thanks for watching.